Hello financial investors and welcome to the channel. My name is Brent and today we are going to be doing our stock market weekly recap for the 11th through the 15th of May 2020. We're going to go ahead cover some of the earnings that were expected this week, go into 3 companies that reported earnings. In the comment section I had SPG and Duke Energy left by Jesse. We're also going to be taking a look at Cisco earnings. Then we're going to go ahead and cover the S&P, Dow Jones, Nasdaq, and the Russell 2000, these index changes for the week. Then dive into the S&P 500 performance over this past week. What sectors were strong, what sectors were weak. We could definitely see that healthcare was pretty strong this week, so if you weren't eyeing a couple of those companies, that could be something to consider. Then we will jump into oil, the dollar, silver, gold, bonds, and wrap it up by taking a look at mortgage rates. These videos are just to keep track of what goes on a weekly basis with the current situation of the market, with what the current situation of the world is in. That way, in a few years, we can look back at this time, or if something like this happens in the future, are we able to use what has happened during this time frame? We fell 30%, we recovered 20%, all within a month or two time frame, and here we are kind of undecided what is going forward. So with that said, if you are brand new to my channel, I'd really appreciate if you head down below, hit the red subscribe button below this video. Also give this video a thumbs up, and if you have any comments or questions that come up during this video, go over the stock market, dividends, one of the brokers, drop it into the comment section below. I do read and reply to all your comments, and let's go ahead and get into it. So a couple companies were coming up on earnings this week, more than a couple here. One that I was really looking forward to was Cisco. One of the biggest competitors out there for network equipment. There's really no one else at the top besides maybe Cisco or Aruba, Juniper. I'm a network engineer, so this is within my sector that I'm always looking for more information. I know Cisco has been booming. So how did Cisco do this week? They beat expectations here. If we take a look at their earnings, they had a surprise of 80 cents per their estimate of 71 cents. That's a beat by 9.6%. They also had revenue coming in 0.9% higher. Instead of 11.88 billion, they came in at 11.98 billion. So about $0.1 billion over there. Now revenue growth is a bit lower, and I believe they're kind of changing up their model for their perpetual licensing. I know that working with Cisco and such, that a lot of their equipment is changing and they're doing different models for their licensing. So I think the revenue may kind of fall here in the short term, but their net income is going to begin to increase in the background, kind of like what happened to McDonald's as they sort of leased out their business name, and their revenue may be decreasing, but their net earnings are actually increasing, so they're able to take in more money that way. The other 2 companies here that were left in the comments were Duke Energy and SPG, Simon Property Group. So Simon Property Group actually came in this week and they missed earnings. This is one of my holdings as well, so I was kind of interested in this one. I didn't see that it was reporting this week. Earnings came in. Now this is a real estate investment trust that owns a lot of outlets and malls in the community and lifestyle centers. So with all of these closed for these past 2 months, all these malls, all these outlets, businesses not being able to pay rent or businesses just up and leaving, Simon Property Group has got hit pretty hard. Now I'm actually surprised they're not down as much as expected. So only a 3.5% earnings per share miss there and a revenue miss of 4%. When looking at that, I don't find too much of an issue with that there. They only worked for maybe a quarter of these past few months, so I think that's pretty decent. Revenue growth there of 6.8%. So I could have seen this coming in a lot worse than it was, and they did have a funds from operation of 1156. Still expected. They did decrease it here from 1225 and 1240 to 1156. So a little bit. I had to look at what their dividend payout ratio is, their dividend payout that they pay out. But that would be something to kind of take a look at for Summit Property Group. Duke Energy also missed, so if you're looking for Duke Energy, they had been expected to come in at $1.21. They came in at $1.14, so maybe some of these companies that are out there running regulated utilities, energy and commercial power, maybe a lot of these companies in commercial power, they didn't pay their utility bill, they just did not, they weren't in session, so maybe they were able to not pay it or somehow. I'm not sure how this company, if you have some pretty regular customers that are continuously paying on a monthly basis, you should have a pretty good idea of what your income is going to be. So, seeing that Duke Energy missed by 7.3% on their earnings and 5.1% on their revenue, that's kind of interesting. It's almost double what Simon Property Group is. You can 3.5, 4%. Okay, so maybe not double, but kind of interesting. Now, jumping into the indexes, here is what we're kind of looking for on a weekly basis, week by week basis. I like to take a look at the stock market performance of these indexes. How exactly are we performing? Now, last week, I believe it was a bit of a negative week last week, so here we are again, another negative week this week, but that is what I like to see. I do not want more green currently with what is going on in the market. A lot of uncertainty. We really don't know what the future is going to hold. A lot of businesses, small, mid, large businesses are going to begin to open up very slowly, but a lot of consumers are not going to want to go out there and purchase things out in the community, going around being and mingling with all other people that could potentially be sick. I was reading an article of a barber in New York who was open regardless of, they were supposed to be closed, and he was actually had the issue and he was kind of passing it around, so he became flagged there. So I thought that was kind of interesting. So 5-day change for the S&P down 2.26%. The S&P 500 was down 2.26. The Dow Jones was down 2.65. The Nasdaq actually did the best this week. So of the indexes, the three main ones, Nasdaq did the best, followed right behind by the S&P 500, Dow Jones in third place, and the worst performer this week was the Russell 2000. Now, 5-day change down 5.46%. Pretty hard hit here Monday, Tuesday, Wednesday. There's also lots of talk of the new stimulus bills, of lots of money getting pushed out for individuals and businesses. So that is still interesting. I just got my stimulus check last week finally. I kind of went onto the website, kept giving me that error message that, we're kind of waiting and waiting and waiting. I did file, a few days before they were due in April, but that got extended till July. So there it is. Stock futures are currently looking pretty positive after last week's negative, this week's negative. Potentially the market will kind of pop up here on Monday, but as we get closer to stock market opening, we'll kind of truly know. Now, this is what I was kind of talking about here earlier in the video. When you look at the 1 week performance for the market, take a look at the sectors here, and right off the bat, which of these sectors do you think is pretty green? Now, right off the bat, in the middle is healthcare. Take a look at healthcare here. AbbVie up 8.04%. I was actually considering selling a bit of AbbVie. I actually am going to be taking some profits on AbbVie. I'm just going to be selling about, I think it's like $1,000 or $2,000 worth of it. I'll probably just trim that position down just a little bit and kind of hold a little bit of cash that way. I believe AbbVie will probably fall back into the $84 range. It seems to be a safe around $80 to $84 is sort of a mildly safe area. If it drops into the 70s, sure, I'll buy a little bit more as well, or into the 70s. But $84 is what I kind of feel pretty good with AbbVie. Anything over 90, especially in this sort of a market, I don't know how it'll kind of fare, in the upcoming weeks. So I'll probably take a little bit of profits there and just kind of wait for a better opportunity. And so just overall, Johnson & Johnson 1.17, Merck 4.42, Pfizer up 1.45. So just overall, healthcare did really well. Healthcare plans, diagnostics, and research. Now, REITs got slammed this week. Take a look over here, 7.44% on Prologis. One company that I'm really looking forward to is Realty Income. So maybe I'll sell a little bit of my AbbVie profits, move them into Realty Income. I think Realty Income is really, anything below 50 is pretty desirable for this company. So I've been eyeing Realty Income, and I've also been eyeing AT&T. Take a look at AT&T. AT&T is essentially a bond for me. If you're able to buy that between anywhere, say $25 to $28, you have pretty good upside potential, locking in a nearly 7% starting yield. And there's a range that it sort of trades in. I think it's around $25, $26, and it has some pretty good highs of $36, $37. So you're buying it right now pretty low. You're locking in a very nice yield, solid company. They've actually announced recently that they are safe as far as continuing to pay out their dividend. So lots of good sort of talk from them. Walmart moving nice, Amazon moving higher, Home Depot and Lowe's, check those out. Lowe's essentially flat on the week, but Home Depot up 2.09. So I think that's very interesting. Good performance there. Facebook and Google pulling back there a bit on earnings this week. Financial sector down 5.61% overall. So down here in the banks, JP Morgan down a whopping 7.33%. Bank of America 9.04. So with more cash getting pushed out, I know we were sitting in a meeting. So I was sitting in a meeting this week. I work at a credit union, and we were talking about a lot of the deposits. We had millions of dollars of deposits coming in from the Fed, from the stimulus checks getting deposited into our customers' accounts, and a lot of them haven't used it. So all that money that's sitting there, it doesn't help. They're not going out there and spending it. They're just kind of leaving it, letting it sit there. And the way that our CEO was kind of talking about it is that it's really not good for our books. It's just cash that's not really being used. So, I'd have to kind of rewatch the video that he was kind of talking about it at. But we just kind of mentioned that a lot of the members that are not that have received their stimulus checks just are not spending it. They're not going out and buying anything. I reinvested it, or I deposited into another account in Merrill Edge. So I completely maxed out my own Roth IRA. I just kind of have some cash in, and they're kind of waiting for a bit of a more pullback. I would really love to see this market pull back a lot more than it has in the short term. Semiconductors, so here's your NASDAQ. Some of the tech companies within there down 6.43%. You can see semiconductors got hit, this ETF, but overall the NASDAQ actually fared pretty well, even though the semiconductors got hit pretty hard. And then we're going to go ahead and jump over into oil. I know Jeremy over at the Financial Education channel has been buying up some USO. I'm not sure if he's still in this position. I know they had an 8-for-1, not a split, but a what's it called when they give you one for every 8. So it had fallen, I believe, into the $2-4 range. So he took 8 of those to make 16, and it's been increasing there from $16 to now $22.46. So he has made some pretty nice profits on there. Oil, crazy to see how fast it had fallen. A reversal. It's a reverse split. It's not a split. It's a reversal. So they basically just reversed and gave you 8. They took your 8 shares and gave you 1. U.S. dollar moving over $100 here. So last week it was at 99.83. Just slowly uptick this week. I'm actually surprised with all the Fed really going out there discussing. Jerome Powell talking about pumping more money into the market. The market continually kind of get bought up. That's the Fed out there buying into the bonds, into the ETFs. They've already came out and announced this week that the Fed, they will be buying. I put this in my post here over on Facebook. If you aren't following me on Facebook, head over to Financial Investor 101 and start following my page. But every time I kind of see some big news, of the Fed going out there and just buying some corporate bonds, buying some ETFs, that's what's kind of propping up this market. And it's going to begin to create a bit of a inflated bubble with some fake numbers for cash being injected into the market. So that's the dollar. Silver and gold both up pretty nicely this week. Silver, of course, takes the cake here, being pretty undervalued in that $12 range here. Just shot up here now, trading at $15.53. So a nice 7.55% gain this week. Gold, half up, 2.21% still very nice there on gold. Bonds also kind of moving slowly up to the upside, 0.46%. You don't see or expect bonds to move very much, so a 0.46%, just continuously staying positive, just moving up. Bonds up year to date, 4.16%, and the 10-year here, 0.64%. So all these numbers here that I'm kind of covering right now, the S&P, Dow Jones, NASDAQ, Russell 2000, the silver, gold, and bonds, and the yield for the 10-year, the current mortgage rates, all of this information, I'm going to go ahead and start posting it over on my Facebook page as well. So on a weekly basis, I'm going to go ahead and be able to track, the previous week's change and also go into this week's change. So mortgage rates increased by 0.01%. So really not a big change there. And that's essentially what took place this week. There were a couple other articles that kind of got floated out. I didn't track a whole lot as much as I should have. I really didn't watch the market. I saw Cisco beat on Wednesday there, and that was just about it. Besides that, I did see the other company, Tanger Factory Outlet, suspended their dividend. That's expected. I'm actually surprised a few others haven't cut their dividends, such as Simon Property Group. They actually didn't fare too bad in their earnings. I'd have to look at how Tanger Factory has done with their earnings and revenue and such, but their company has just dropped so much from $15-17 per share to pretty low. Let's look up SKT on my other screen here, and then I'll kind of just let you know. But it's worth $5.75 right now, so it is not doing so well right now. But it has been a lot worse. They're worse here. Let's go look at that's not going to be. Yeah, $4.57 there. So $4.26 is their low, and that's extremely low for a company that was just trading in that $15-17 range. I still believe in the long term, Tanger Factory will be, or not Tanger, yeah, Tanger Factory will be completely fine. But for this time being, with what is currently going on with the whole slowness, and this being a sort of an outlet mall and real estate investment trust, it is not doing well. Here, my local hospital in town, Providence, where my wife used to work, she quit a while ago, almost a year ago now, to take care of our kids and stay home, but they are kind of doing it the opposite way. So they've actually announced that they're going to be enacting temporary pay cuts. They're going to be furloughing, what are they called? Medical assistants, medical nurses, and such, and causing enacting people to take a week off of no pay. They can use their PTO if they would like, but they'll just basically be 1 week, you'll be off for a week. And I don't know if they'll be able to claim unemployment during that time frame, but I know that hurts, to be told that you're going to be taking a pay cut. You are going to have to take a week off. You are not going to be coming in to work. What if about childcare? What about your bills? What about, there's so many questions that come off of that. And then on the opposite side of that, the hospitals are supposed to be on the front lines helping everyone go through this pandemic. And here they are getting pay cuts, furloughing employees. They don't need them at work because we're not really sick here. There's still a lot of people out and about. There's only been, I think, like maybe 20 cases here where I'm currently living. So not a lot, but kind of interesting. Walmart on the other side, Starbucks on the other side. Starbucks is paying $3 on top of their normal pay, plus they're doing a bunch of other incentives. Walmart is doing another cash bonus, so this is their second round of cash bonuses going out for employees. I know McDonald's was also doing some crazy stuff. So in the middle of a pandemic, hospital staff and nurses are getting their hours cut, they're getting their pay cut. So I just kind of wanted to see how, what others would think of that same thing. And here's me, Brent, kind of posted a year ago today. If you have a 401k, you're invested in the stock market through any sort of account, taxable, retirement account. Last year we were in the middle of a trade war. That was the headlines last year. The market was crazy. The NASDAQ, the Dow Jones, and if you were to look back 1 year ago, see if I have that anywhere. So let's just look up S&P 500 and look at the time frame 1 year ago. Where are we at? So let's go ahead and click 1 year ago. Slide to the right. We are down from 1 year ago, 0.44%. So even though we had trade wars last year, now we have a pandemic. There's so much going in this year. We have a election year as well. There's just so much out there that is going on, and we are only down 0.44% from where we were last year. So do not worry. If you are invested in this market, continue to stay strong, continue your plan of dollar cost averaging into the market, work on maxing out your Roth IRA, work on contributing to your HSA, your health savings account. If you have a taxable account, depending on what your plan is, don't do as I tell you. Do as your plan is to invest, but continue to stick to your plan. What I kind of already covered, AT&T and Realty Income. AT&T was trading at $28.22. It's actually a little bit cheaper now, so actually starting a little bit higher. So this was a yearly income of $73.70. Realty Income here traded about the same price, was paying out $56.36 if you invested $1,000 into these. So $1,000 into AT&T would round you roughly $73.70. $1,000 into Realty Income would net you about $56.36. Realty Income being a monthly paying company there, that's still pretty nice. $56 by 12 months, that's around $5 per month just in straight dividend income. So that's very nice. And if it's paid with any Roth IRA, that's completely tax-free after you hit 59.5. So imagine if you invested $1,000, increasing your income by $5 on a monthly basis, and you did this, over the next 5, 10, 15, 20, 30 years out, imagine how many dividends that would be in a monthly basis. I'm not telling you to go out and invest in O, but there's a lot of ETFs that also pay out on a monthly basis. And here is our weekly change. So here's what I'm kind of talking about. On a weekly basis, I'm going to go ahead and post what the weekly status is. So 16 minutes ago, I posted this, but here's our changes for the week. Just a straight recap. S&P down 2.26, NASDAQ down 1.17, Dow Jones down 2.65, the Russell down 5.46, followed by our silver, our gold, our bonds, our mortgage rates, and our 10-year current yield. So how are you really feeling during this market? Are you pretty happy with what's currently going on? Would you like to see more red? Would you like to see more green? Let me know in the comment section below. What is your opinion? Why do you believe, your opinion? And that is pretty much it. That is going to be it for today's video. If you guys did enjoy this video, definitely give this video a thumbs up below. Subscribe to the channel if you have not yet subscribed. And of course, I would really appreciate it if you do go down below. Just leave me a comment. Say hello. Let me know how you're doing. And that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.